this is what happens when you start juggling budgets and don't have enough money. So just wanted to point that out. It's not punishment, okay? Although it seems like it, but it's not punishment, okay? So, Mike, you like that? Was that good? Katrina, will you please call the roll?
Mr. Smith? Here. Ms. Tanner?
Here.
Mr. Burke? Here. Mr. Bender? Mr. Corbin?
Here.
And Mr. Strickland. We have a quorum.
Thank you. Annie, you ready for the monthly finance report?
Mary, I just want to confirm we're doing this first and then them last. Okay. All right. So, monthly finance report. As always, for the first report, we have the sales tax information for you. So we have the sales tax collections through July of 2025. The first report is for Sales Tax District 3. It shows for July that we have collections of approximately $6.7 million that were remitted to St. Tammany Parish government, which is an increase of about 8% over July of last year, which is consistent for the increases from prior years as well. And so for the year, we're estimating that we're similar to every month prior to this, that we're going to be up about $3 million over budget and over the 2024 actuals. So we're projecting about $79 million in collections or remittances to St. Tammany Parish government for Sales Tax District 3. All right. Sales tax collections for Highway 21, that's the next report. So for July, we had collections of approximately $110,000, which is 136% over collections of last year. As we talk about every month, that's due to the increase from Costco. We will have hopefully a higher number like that again in August, and then you'll see that the increases will not be nearly that significant because September through December should be consistent with last year, since that's when Costco came into play with the numbers. So we, similarly to last month, we expect the sales tax collections for Highway 21 to be about $1.4 million for this year. Are there any questions on these two reports? Okay. The next report is the operating and grants funds with the projected fund balances as of August 31st. This shows you what the projected available fund balance is based on the budget as well as the actual through August 31st. So this shows you the information with all of the budget amendments, including those budget amendments that are through the budget amendment that we will be introducing Thursday next week, which we'll talk about in just a few minutes. And it also shows you that for most of the funds, actual revenues and expenditures to date, we have a projected available fund balance based on actual cash receipts and expenditures that are positive, but that we have those minimum fund balances in place because we don't always get the cash during the year. Some of it comes at the end of the year, like we've talked about with the ad valorem and the parcel fees. And so you can really see that in a few of the funds based on this report. When you look towards like animal services and some of the lighting districts, you will see that the projected available fund balance for those funds right now is negative because the cash receipts for the revenues haven't came in yet. And so that's why those minimum fund balances are important. And I think that's pretty interesting to see at this point in time and year. In the general fund, we don't have a negative projected available fund balance for actuals at this point in time because we transferred in that $7 million at the beginning of the year from the capital project funds. Had we not did that, we would actually have a negative projected available fund balance at this point in time because we would not have those funds to cover us. So I just wanted to point that out. And then the last report is the budget to actual report as of August. So that's 8/12 of the year, which is 66% of the year. And so, this is the bigger report that shows you the budget to actual for every single fund and for every single revenue line item and then for each of the departments in every fund. For most of the departments and most of the expenditures, the expenses are in the high 50% to the 66% being expended for most of them. Some of the departments are a little underspent, which, isn't a bad thing. I can tell you from finance, we haven't spent, but right under 60% of our budget at this time because we've had vacancies during the year. So we will not fully expend our budget during the year. So there are a few departments that are that way, just in case you're wondering. Then from a revenue perspective, that's one of the things I like to keep you updated on. So it appears that we have a few revenues that we will not collect what we budgeted for during the year at this point in time. And so that would be our cable franchise fees, our television fees for PEG, the government access channel. Those, as people switch from cable to streaming and other types of services, we are not collecting those revenues, and those have decreased over time. So we budgeted $2 million for cable franchise fees, and I expect that we'll get $1.7 to $1.8 million. So we'll be about $200,000 under budget in that one revenue line item. But in all the other ones, we will definitely make that up in the general fund between interest income and licenses, between those things and a few of the other revenue accounts. I don't think we'll be under budget in total. We'll still collect 100% of the revenues in the general fund. It'll just be made up in other categories. So I don't think we have anything to worry about there. One last thing I wanted to point out, in the budget amendment that we'll talk about in just a little bit, we're going to be introducing or presenting to you an amendment to increase some of the utility budgets in the lighting districts. So I just wanted to point out that utility costs are increasing. And so that's one of the things that in some of the building funds we're able to make do with some of the other budgets, reduce some of our supply costs, look at cutting back in some of those areas. Thankfully, our insurance costs were less, so we're able to move some excess budget from there to cover utility costs for like electricity and things. But in the lighting districts, we don't have that luxury because the whole budget is electricity costs. So that's why we'll be coming to you with the proposed budget amendment in the lighting districts. So I just wanted to make you aware that we are seeing increased costs in utilities.
Where are we getting that money to sustain us to the end of the year? From general fund or interest?
So for the buildings, it's in the building fund balances.
Okay, how about the lighting funds?
It will be from their fund balances.
Okay, all right, okay. Arthur?
Yes, thank you. I actually had a question from the earlier report, if you don't mind. I'm not sure if my light was working. Annie, could you let us know, in terms of the sales tax District 3 revenue, are we following we're pretty close to your estimates? The actuals have been pretty close, because you're projecting that we might make just under 80 million?
Yes, that's correct.
Okay, and that's basically our, I like to say net, that's our portion after we share it with the municipality.
Yes.
Okay.
Yes. So if you look at the top of the report, it shows that our estimate for the total tax for Sales Tax District 3 is about $95.4 million. We estimate that the share with the municipalities is $15 million, and then what St. Tammany Parish government, what our collections or the remittance to us from the sheriff is, we estimate that to be right at $80 million for this year.
Okay, perfect. Thank you so much. Thank you, Madam Chair.
You're welcome.
All right, one question. Have we received the breakdown for the cities on that, or are we just doing a guesstimate?
So we have some information. We're working on the rest of it. We have, I would tell you, probably 90% of the information that we need, and we're still working on getting the rest of the information.
Okay, so we don't need to take any action since you're working on it. Do we?
Not at this time. We're
just let us know.
Yes,
Okay.
we will let you know.
Mr. Corbett?
Yeah, thank you, Chairman. I'm on the fund balance page. When looking at the general fund, you talked about that, and that right now it's $3.5 million. Projected available is $1231. is that an estimate at complete, or is that just an incorporation of what's been actually spent today?
That is what has actually been spent to date.
Okay, what would be your EAC, or estimate at complete? Because that would be actual plus projections. I think that was something I talked about last year.
Yes.
That I really think that's the relevant piece of information, is a significant, maybe not is a significant piece of information that I would like to have us see, especially as we start winding out the year,
Yeah.
is what's going to be the estimate at complete on these items, which would include your judgment as to what projections are going to occur in the next quarter that would help us get to the end. Because this implies, if you just read this verbatim, it looks like on 12/31/25, we're going to have 3.5 million, and I don't believe that's true.
Yes, sir. I don't think it'll be 3.5. I don't think it'll be the budgetary number of 954,000 either. It will definitely be somewhere in the middle. I'm estimating somewhere around the $2 million range.
Okay.
But we will definitely work on having the report built in that manner with the estimate to complete for the next month, if possible.
Yeah, or just it could be added as an just as an
Yeah.
attachment, or maybe in some verbiage up front.
Yeah.
I think that's what we're really looking for, is
Yep.
what's going to be remaining when we get finished.
Yes, sir.
Thank you very much, Annie.
What would you suggest is a recurring period for that? Is that something you would think we should do towards, like, August every year, or?
Yeah, I think as we get as we're into the second quarter, or maybe just at least for the third quarter, we ought to start making those projections.
Yeah.
I think that's when it really becomes relevant. We talked last year potentially
Yes.
about doing it on a quarterly basis. It seemed like at the end of the first quarter, it's like such a big projection, so much
Right.
things you project that it really didn't add much value. And so I really think the focus is in somewhere late third quarter or fourth quarter is when it's important, starts to get important.
Okay. Yes, sir.
Because that affects like public works and engineer, other departments, as well as this general fund balance.
Yes, sir.
All right, thank you, Annie.
You're welcome.
Mr. Smith?
Yes, I may be speaking out of turn here because I'm not sure. Maybe it's litigation that I shouldn't be asking this. I'm not quite sure. Some of these state mandated budget items that look like we're taking our time paying what we budgeted for 2025. Can I ask more about that, specifically with the sheriff and the jail? Answer that.
I'd weigh in and suggest that there be no discussion in a public meeting about those matters, since they are involved, and my appreciation is they are involved in active litigation right now.
I kind of guess so. I had a big question, but I figured I got a zip. All right, that's it.
Mr. Bender?
Thank you, Madam Chair. Annie, going back to Councilman Corbin's question, and your answer, it's going to be around $2 million. Okay, I just want to make sure I understand this correctly. Are you saying that by the end of this fiscal year, calendar year, that you expect to have a surplus in that budget for the year of $2 million out of the $80 million that we start off with, the net, from Sales Tax District 3, is that correct?
So I thought we were talking about the general fund, which is not the 80 million in sales tax.
Were you speaking about the general fund?
I was talking about the general fund line item, Drew, the very first line item on the fund balance.
Okay, well, who started off with Sales Tax District 3?
Mr.
Oh,
Laughlin.
Mr. Laughlin. But you were referring to the general fund?
Yes, but I would like to say that, speaking of the $2 million, that is going 100% into the 2026 budget to be used for the state mandated costs. So it's not going to be available for use for anything else.
Okay, thank you.
Andy, I do understand that.
Yes.
Okay. Any other questions? Okay, we'll move on to ordinance calendar number 7968. And that is ordinance to amend the 2025 grant budget, amendment number 9. Annie?
Yes. So grant grants budget amendment number 9 includes several grants awards that we received. It also includes some transfers and shifts in funding. So the very first item is for the opioid abatement settlement funds. And so we're going to transfer about $1.2 million in unobligated funds into additional programs as recommended by the task force. And so this includes programs for the salary and benefits for the program administration for $58,000, the 22nd Judicial District Court District Attorney's opioid prosecutor for $149,000, the 22nd Judicial District Court's drug court staffing and program services for $318,000, the 22nd Judicial District Court navigator for year 3, $75,000, the 22nd Judicial District Court District Attorney's opioid investigator for year 3 for $45,000, ViaLink for the opioid teen text line for year 3 for $10,000, for the 22nd Judicial District Court, the Veterans Court for Housing and Transportation, $30,000, and for the opioid abatement grants, for an RFP to put out funds for local organizations for $500,000. The next award on the grants budget amendment is from NEA for Promotion of the Arts for $15,000. This is a grant award received to support staff salaries and consultant costs related to the creation of a cultural plan for St. Tammany, St. Bernard, and Washington Parish. We also have an award from LHC for LaHeap for fiscal year 2025 for additional funds of $197,000 for providing energy assistance to low-income families. This makes the total award that we received for them for that fiscal year $1.7 million. We also received a grant award from LHC for emergency solutions. This is received for programs to provide emergency shelter to homeless individuals. That award was for $107,000. We're also going to, as I mentioned, transfer out some remaining unobligated funds from OCD from Restore Act Louisiana for $5.5 million to fund 2 utility projects for St. Joe Water Consolidation and Ben Thomas Water Interconnect. We'll see more about that when we get to the companion ordinance for capital improvement amendment number 23. We also got 2 awards from GOSEP, one for State Homeland Security Program for fiscal year 25 for almost $99,000, and this is to support state and local efforts to prevent terrorism and other catastrophic events. Part of this award is for some capital assets, and so that'll be further discussed on Capital Improvement Amendment number 24. The other GOSEP award was for $63,000, and that's for the Emergency Management Performance Award, and that's for emergency management personnel costs, so it helps to fund staff salary costs. We also received the Keep St. Tammany Beautiful Youth Cleanup Initiative Award for $10,000 to organize quarterly cleanup days for children aged 12 and over, focusing on litter abatement. That grant does require a 15% match, so $1,500, which will be funded by Environmental Services. And finally, on this grant award, grant amendment, we have the grant award for litter enforcement, the surveillance camera program. We received $10,000 to purchase and monitor approved surveillance cameras and software used to enforce litter and illegal dumping laws within the parish. Once again, the grant requires a minimum of 15% match, which will be funded by Environmental Services.
Okay. Any questions? Okay. Ordinance calendar number 7969, ordinance to amend the 2025 capital improvement budget and capital assets, amendment number 23, utility capital project.
Okay, so capital amendment number 23 goes back to us discussing OCD and the Restore Act and those 2 projects that we're going to fund from those grants. So the first one is for the Ben Thomas Water Interconnect, and it's for $745,000. This project will consist of the design and construction of a water main extension required for the interconnection of the Ben Thomas water system to an emergency water source in Slidell. The second project on this ordinance is for the St. Joe Water Consolidation. This project is for a total of $7.6 million, and it's funded by OCD Restore Louisiana and the water sector. It will consist of the design and construction of various water storage tank improvements, water well improvements, and a water main extension required for the consolidation of the Alton and St. Joe water systems in Slidell.
Thank you. Any questions? Okay, ordinance calendar number 7970. Ordinance to amend the 2025 capital improvement budget and capital assets, amendment number 24, Homeland Security and Emergency Operations Capital Asset.
All right, so once again, this goes along with the companion ordinance with the grants amendment number 9, going back to the award from GOSEP for the State Homeland Security Program. We're going to be able to purchase some assets from that award. The first is for a generator for 20 kilowatt trailer mounted for almost $22,000, and this is to provide standby power during emergency response operations. We're also going to work with the St. Tammany Parish Sheriff's Office to utilize grant funds to purchase a remote firing device kit to be used by their explosive ordnance disposal unit, and it's a remote bomb firing device for almost $35,000.
Okay, any questions? Okay, ordinance calendar number 7971, ordinance to amend the 2025 capital improvement budget and capital assets, amendment number 25, development capital project.
All right, so this capital amendment for development is for the Bayou Liberty land use study. We're adding an additional $30,000 in order to complete the study, including land use regulatory and mapping analysis that advances more resilient residential housing construction and land use strategies in the parish. Tasks that will be funded by the $30,000 include a review of flood risk data, stakeholder meetings, adoption and transition support, amendments to the GIS map layer, and production of a site-by-site map.
Any questions? Okay, last ordinance. Ordinance calendar number 7972, ordinance to amend the 2025 operating budget, amendment number 15.
So this operating budget amendment number 15 is what I mentioned earlier when we go in through the financial reports regarding the increase in utility costs. So this is to amend the expenditure budget for the increase in the utility costs for 5 lighting districts. Lighting districts number 1, 4, 11, 14, and 16, due to additional lighting requested by constituents in a couple of those lighting districts, as well as just the overall increase in average utility costs. So the amendment by district: lighting district number 1 is for $20,000, lighting district number 4 is for $30,000, lighting district number 11 is for $500, lighting district number 14 is for $1,500, and lighting district number 16 is for $12,000. And that's all to be funded from their fund balance.
Any questions? Okay. Do I have a motion to, well, I have to move these to the, I got her. Where's Joe? I got her, Joe.
She got me.
I got her. Yeah.
Mrs. Smith.
Oh, Mr. Smith, I'm sorry.
Just a moment of personal privilege, please. Annie, I just want to thank you. You're doing a terrific job, and these Finance Committee meetings have been running very smooth, and you supply us with all the data that we're looking for, and I appreciate it. Thank you.
Thank you. I appreciate it.
I think it goes for the whole committee. Andy, thank you very much. Do I have a motion to refer number 6, 7, 8, 9, and 10 ordinances to the full jury?
So moved.
Second?
You mean to the council.
Full council. See, I have a one-track mind. Okay, to the full council. Okay, thank you. All in favor, say aye. Aye. All opposed? It carries. Okay, we have a presentation by MGT Consultants regarding Parish Government Cost Allocation Plan.
No.
All right, hello everyone. I'm going to attempt to share my screen. Yeah, I just sent a request. All right, are you all able to see my screen here?
Yes.
All right. All right, so yeah, my name is Matthew Wilson. I'm a consultant here at MGT. I think, Parla, do you want to start it off with a kind of overview of what we're doing today in their introductions?
Absolutely. Thank you for your time this afternoon. My name is Parul Patel. I'm a director with MGT with a little over 20 years of experience in government consulting, ranging from all different types of services and solutions like cost allocations, plans, indirect rates, user fee studies. And Matt, if you want to just share a little bit about your background before I jump into the rest.
Yep, like I said, my name is Matthew Wilson. I also work on cost plans and direct cost rates across the country. And I have a little over 4 years experience, and I think I've been working with the parish for 3 years now.
Thank you. So today what we'll share with you, just briefly give you a little bit about our MGT's background and experience, and then we're going to dive into more specifics on what is that cost allocation plan, why do we do it, how do we do it, and then specifics on the actual plan that's been prepared, the most recent plan for St. Tammany Parish. So MGT, 50-year-old company, been around for many years, nationally recognized. Just wanted to share that, you know, we not only do financial solutions, but we're in pretty much all different types of service solutions with technology, human resources. We have, I think that number is even higher now, over 1,000 employees across the country. And our main goal and mission with every project is social impact in the communities that we serve. Specifically, in our group, which is the fiscal group, we're the team that provides services such as cost allocation plans and rates, user fee studies. That's our core business, you know, cost allocation. We have 40 dedicated consultants that do cost allocation and providing these solutions all across the country. I think we are in 37 states. So that's our focus and commitment in our fiscal team, and to provide better service and best advice in that cost allocation space. And then specifically, you know, we work, like I mentioned, all across the country, but we have many current clients in Louisiana. And if you want to flip to the next, yeah. So you can kind of see some of the other agencies across the state there that we're providing similar solutions for. With that, I am going to turn it back to Matt, and he's going to get into more specifics on cost allocation.
Thanks, Parl. So when you look at what a cost allocation plan actually is, it's essentially an after-the-fact accounting document that helps identify the agency indirect or overhead costs and distribute those costs out to those funds, departments, divisions, and programs that are actually benefiting from that service. And at its most basic level, it's an invoice for the administrative services rendered. So it is also a method to calculate and assign the cost of the supporting programs such as HR, finance, IT, counsel, and procurement to the programs that are actually to the operating programs like public works, utilities, sheriff. And the methodology for the cost plan is to assign the cost in a manner that is reasonable and logical, and that it's reflective of the level of service that they are receiving. And why do we prepare a cost allocation plan? It's helpful to identify the full cost of providing these services or operating programs. So your indirect cost, the costs these departments are receiving from each other, plus their direct cost. It's also useful in the budgeting process to understand the true or full cost of providing the services for subsidy decisions and resource allocation. It can also be used to charge enterprise funds and special taxing districts for administrative costs. I believe the parish, before the cost plan, was charging a flat fee to the non-general fund departments for these administrative services. But since using the cost plan, they're able to charge more and have a basis for those charges as well. It can also help set the user fees or other billing rates to recover the full cost of providing these services. And it can kind of help evaluate the cost of those providing these services and ask the question, are we doing things efficiently? The cost plan methodology and process, we kind of split up into 4 phases here. So in the first phase, we're gathering data, reviewing the structure of the parish, meeting with those departments that are actually allocating their cost, having a conversation with them, then collecting additional data after having those conversations. The second phase, we're actually developing that plan structure, developing allocation bases based on our conversations with those allocating departments, getting a plan put together, doing our internal review, and then presenting that first draft. Moving on to the next phase, we will, look at the comments from ourselves, ask the questions that we have, review the comments that the parish has, present the updated results, and a recap report. We have additional reporting that helps us kind of identify variances and drivers for some changes year over year. And then the post-project phase, as needed, defend plans if they're going under audit, and then ongoing support and training if anyone who's looking at the cost plan, has any questions at any point. So for Tammany Parish, we provide 2 full caps a year. So we prepare the first one based on budgeted costs, and then we do a second one in around March or April for the actual costs, and we do a true up to those plans. So St. Tammany's Parish plan includes 13 administrative departments, 54 cost pools, and 50 unique allocation statistics. And this right here is a snippet from our system. So it actually shows the administrative departments up here, and then you have the functions. This is the key activities of those departments. And then to the right of there, you can see the allocation bases that we're using to spread those costs out to the receiving departments. So during the true-up process, we meet with each one of these departments. We take a look at the allocation results for their actual plan, and kind of have a conversation and say, does this look reflective of the service that you're providing? Are these functions still reflective of how you guys operate? Are there any activity changes? Do you guys do more, do less? And so the only real changes, the overall methodology has been consistent since we started the plan. The only changes that are really made are when we have these conversations with the allocating departments and just make sure that the structure of the cost plan is still reflective of how they operate.
Yeah, I mean, essentially, the key to the overall process is consistency and transparency, right? So, taking each of those departments, breaking down those costs for each of those departments, and then identifying what are those key services and coming up with a driver that mirrors the service levels. And that methodology has been consistent over the years. Only change would be if there is maybe a better tracking mechanism, or if there's a service that changed that is no longer provided, or a new service that's provided.
Thanks, Barl. And then what comes out of our system, the cost allocation results. This is a snippet of the Excel version here. And it basically shows you that we have the administrative departments on the left-hand side over here, and then the receiving departments across the top. This is just a snippet of a couple. But you can see the total allocated cost to social services, $260,000. And then you can see where each of those costs actually came from. And then in the actual full cost plan report, you can actually dig down to get to a greater level of detail to see why those costs are being allocated out to these receivers. That was our quick presentation on the cost allocation plan and the process and the methodology. Was there any questions for us? Or Carl, did you have anything else?
I think we can open it up to questions.
Okay.
Okay, Mr. Bender?
Yes, thank you, Madam Chair. I'm trying to think, both Paula or Parul or Matt. We have various departments that bring in revenue, but we also have departments such as the parish council, the parish president office, et cetera, administrative positions that do not bring in revenue, okay? How are you allocating from our general fund when that has been coming down?
When you say coming down, do you mean like if a revenue stream has been coming down, how do we allocate?
It's decreasing.
Yeah. So the allocation, so that's one of the key things to keep in mind is oftentimes, allocating and charging are two separate ways to handle these costs. So in the plan, we are going through and identifying those services and the metrics that drive those costs and allocating them out, regardless of funding stream or if they are decreasing, if their budget size is decreasing. That allocation is based on service level or services received. The simplest example that we like to use would be like payroll services. Everybody can connect to that because you get a paycheck. There's costs associated with providing those payroll services, and so the way we would capture what those costs are and allocate that to everyone that benefits from the service, regardless of their budget size or regardless of what they can pay. We're identifying this is how much it costs Department A, B, C to get these services.
Any other questions? Mr. Bender?
Yes, ma'am.
You have another question?
Okay, thank you very much for that response. I appreciate it. Thank you.
Thank you. Okay, we have one card. Mr. Allen. Help me with this.
Alan
Triffitt. Okay, Mr. Allen. So your last name, Triffitt?
It's Alan Thriffley.
Okay.
I live at 134 Normandy Oaks in
Thank you.
Covington, Louisiana.
Thank you, sir. Okay.
We're here to talk about cost allocations, and the finance department has been, we've met with them and they've provided us information, and I find the information very confusing and voluminous. So I just have a comment, and I would like to say, besides employees employed by Public Works, charge of District 3 sales tax revenue, how much is allocated to District 3 sales tax revenue by allocation? And I have a follow-up question to that. How many tiers of allocations are there? And it appears that there's some type of interview process that takes place with the employees, and they say, I spend X amount of time on this, percentage of it, and then some type of allocation of their time is allocated out. But my question specifically is, how many tiers of allocations take place in St. Tammany Parish and where they come from? Okay? Identify and provide an explanation of each tier. Simple as that. We're not looking for 400-page spreadsheets. We're looking for a summary. It appears that some type of summary was presented. I couldn't, it was kind of detailed, I couldn't read it, but that's my only comment. The citizens in St. Tammany Parish really want to know what's going on with these cost allocations. And, I know it's a sophisticated process. It's an accepted process. I'm not questioning the process, but I think the citizens deserve to know where the money is actually allocated to and where it's dedicated to, particularly when it comes to District 3 sales tax. And that's my only comment. I don't know if you'll be able to do a reply today. I would also like copies of the presentation if possible. I don't know if that could be possible. So I appreciate the time. I appreciate everybody here, and I really appreciate the Finance Department for giving us and meeting with us and give us some information. So thank you.
Thank you. Annie or Matt, do y'all want to address that or the question?
Do you mind if I say something?
Okay. Mary?
I think what's difficult with that question is every department has different metrics. So I just want to give you an example what the council office does so that maybe you'd understand why there's so many spreadsheets or why this is so complex. So when I became council administrator, there was 2 metrics on how the council office was allocated. And that was how many ordinances and which departments those ordinances were coming from. And it was also the number of work orders to each department. So it's very easy for us to go back in our records and do that cost allocation. After I came in and I had some time as council administrator, I noticed those metrics weren't a full picture of the work that our department did, and that's the purpose of those meetings. So as time goes on, if you get ideas that there's maybe another metric or better way of calculating this, how do you do that? So what I saw is there were some issues we were working with departments on, but it was never became a work order, or we did not put the work order in, and it never became an ordinance. There was this all these other issues that laid out there. So when we had our yearly meeting with them this year, we changed our metric to also include meetings with departments so that we could get a more accurate picture of and more accurately cost allocate our time. So there's several departments that don't have revenue, including the president's office, CAO, council, PIO, finance. There's a ton, and I'm missing a lot. So their overall cost is about $15 million, but only about $500,000 actually hits the general fund, because all of those departments have specific metrics of how then the finance department and the consultants then do. So I think that's a more difficult question. It needs more discussion most likely, but I just want to give everyone an idea of how this is kind of being calculated as an example.
Thank you. And can we provide the gentleman the slide? Okay, thank you. Okay, Annie?
Yeah, so just to follow up on that, there are only, like Matt said during the presentation, 13 departments who have a cost allocation through the cost allocation process. And those are what we consider our service departments, because they provide service to the rest of the departments of parish government. The majority, of these departments, we don't provide service to external parties in a sense. We are there to support public works, utilities, environmental services, animal services. We support them in their mission of supporting the constituents and the public. So we are there to work for them. So that is why we use a cost allocation plan to show how we provide support to them in their mission. And that way it shows that how we are able to use their funding to support us, since we don't have a funding source. So the ultimate goal is to show that our work supports their work, because they can't do their work without us. Otherwise, they would have to hire their own people, because in public works, like Matt was saying, or Pearl, that they're not going to get a paycheck without an HR department. So they would have to have an HR person. They would have to have an accountant. So that's why we use a cost allocation plan to go in and say, that's how we're going to allocate some of our costs, because what we do benefits them. So those are the 13 departments, and they're in the presentation, so we'll get it to him, that shows, these are the list of the departments that are part of that cost allocation plan. So when you say how many take place, well, those are the departments that are cost allocated, and we're allocated across all of the funding sources of parish government. based on the services that we provide. The other things that are funded by the sales tax are shown on the face of the ordinance. So that's your answer.
Thank you.
You're welcome.
Go ahead. President Cooper.
Thank you. Thank you. I think for the benefit of our citizens as well, it should be noted when we actually went to this form of cost allocation. When was that put into place? Can you answer that, Annie?
2016.
Okay, this was put into place 2016, some 8 or 9 years ago. Has this firm been doing the cost allocation for there? Okay. Before that time, how were departments being funded before this type of cost allocation? How were departments that didn't generate revenue, how were they funded? From what fund?
So some of them were funded from the general fund because we had other funding sources in place for state mandated costs. And then there were also other mechanisms in place, like Matt mentioned during the presentation, that some things were charged a flat fee. We had some people who were just, like one of the lawyers, they were just paid out of Sales Tax District 3. One of the finance people were just paid out of Sales Tax District 3. So we had a number of different mechanisms in place that were put in place by the finance department to fund certain pieces of the service departments in order to pay for all of the administrative services of parish government.
And to the consultants, the time that you've been doing cost allocations, have you witnessed or discovered any nefarious ways of cost allocations, or any ways that other agencies aren't using cost allocations?
Yeah, so there's multiple types of plans. So this is a full cost allocation plan that's primarily for internal use. That is very common across many of our agencies that we work with in Louisiana and in other states, where they are truly using the plan to charge non-general fund or enterprise funds, internal service funds, for indirect cost to try to make the general fund as whole as possible. There is a more restricted plan that can be used for any external reimbursement. So from a state or federal agency or for grants, you would need that more restricted plan. I don't know if that addresses your question.
Thank you.
This is common practice with all of our clients. And, we pull from our resources that, we always look at other agencies to see if there is something new that maybe we need help trying to come up with a metric that matches the services. We can lean into our other clients to see if there's something that may be appropriate for the parish, right? We're not just trying to push something. It's got to be data that's either easily available or matches the services. And in the absence of having things like that, if you don't have something pulled from a system that's an exact metric, there are more general allocation approaches that are acceptable.
Thank you. You did show a list of some of the Louisiana agencies or governmental entities that were. Could you read those out? It was hard to read. Could you read out some of those from Louisiana, if you want?
Yes. Let's see. Alexandria, Caddo Parish, Jefferson Parish, Lafayette Consolidated Government, Lake Charles, Orleans Parish District Attorney, Rapids Parish, St. Charles, Baton Rouge Retirement and District Attorney, Louisiana. We do the Louisiana Office of Statewide Accounting and Reporting in the City of New Orleans.
Thank you. One other question. You mentioned that we had three enterprise departments, so we had 13 that were cost allocating, but we have enterprise departments too that we aren't utilizing cost allocation. Is that correct?
So those 13 departments, those are actually your departments that provide or have administrative or indirect costs benefiting the agency as a whole. That's how we came up with those 13 departments. there are many other departments in the parish, but they're not necessarily administrative costs or providing services that are benefiting the entire agency as a whole. They may be more looking outward facing. So that's how we identify those allocating departments. Those are the costs that get pushed out agency-wide, because that's truly where your general administrative indirect support lies.
I'm going to ask another question, if I may. Earlier, Mr. Thriftley, and I think he's representing Chamber PAC, as a private citizen, but you were saying we want to know, we would like to. As a private citizen, Mr. Thriftley was asked a question. He said it might be difficult, it might be complex, but it might be simple to answer. Is that a fairly simple question to answer, what he asked about the tiers and the, did you understand his question?
Unfortunately, I think the audio was cutting out when the gentleman was at the podium. I can hear all the rest of y'all, but at the podium, the audio was cutting in and out. If you're able to give me a quick recap, we can try to address.
I'd like for them to be able to answer the question that he asked. If,
I can repeat what I said. Let me get my phone. Excuse me 1 second.
you might have to speak louder in the microphone too, Alan.
Specifically, the question was how many tiers? In other words, do you take a certain, you sit down and actually say, okay, we got this department, this department, this department, now we're going to allocate that out. And then how many tiers take place in allocations in St. Tammany Parish government? Do you take another set of people and take their costs and allocate it out back again and spread it out like playing cards? Everybody gets a card? And how many times does that happen? That's only my question. I'm trying to understand. It's very difficult for a layperson to understand. You have a complex accounting system here, and your people are working very hard to keep up with this stuff. As John Q. Public, I'm just trying to ask a simple question. My simple question was how much District 3 how much money is being allocated to District 3? What is District 3? District 3 is roads, bridges, and drainage. And we have costs that are hitting that for services, and we just want to know what that is and make sure we got that nailed down so everybody understands what that is. It's transparency. It's nothing else. It's not, nobody's doing anything wrong. Okay? The allocation is perfectly normal, it takes place. We just want to understand what that is. So specifically, to get back to my question, okay? Identify and provide an explanation of each tier. In other words, if you give it out every time somebody gets a dose of cost, how many times does that happen? And I just want to, and what's the levels of the cost being divvied out each time? Okay. That's all. Am I making myself clear?
Sir, I think I know what you're talking about. You just want to make sure that we're not going from this tier to this tier and reallocating everything again.
I just want to understand the process. That's all. That's all it is.
I think that's probably. I don't know where the Matt can answer that now, or where it's something that Annie will have to answer for you later.
I think
we have another meeting after this, so
it's a complicated process. It's not. Right. It's not one little number that you can come up with, and I understand that.
Cost allocation for years. I got you. You want to make a brief statement, Gina?
You have to press the button.
Press the button. Oh.
Press it again.
Press it again.
Can I just cut to the chase? This is what I think the people want to know. They want to know how much, what percentage of sales tax District 3 roads, bridges, and drainage money is being cost allocated out to support the rest of parish government. That's what they want to know. It was reported today that we spend 70% of our road, bridges, and drainage money on parish government. That is incorrect. Annie, can you please tell me what percentage of sales tax District 3 is cost allocated out? Is it 70%?
No, it is not 70%. It is only 6%. In 2024, $5.4 million of the Sales Tax District 3 money were spent to support the departments, those 13 departments of parish government. And so that is only 6% of the sales tax. In addition, that is in the Public Works Fund, which is also funded by other things than just the sales tax. So it would actually be less than 6%.
Okay. Thank you.
Thank you.
All right, Mr. Bender?
Yes, thank you, Madam Chair. As a follow-up to what Gina just asked Annie, but also for President Cooper, my colleagues, and Mr. Trifley. So bear with me briefly. My background was 40 years before I retired with 2 national companies, and in both rose to upper management. But the last one I spent 30 years with, okay? So I'm gonna refer to that, but it applies to both of them. And I'm asking this of MGT people, but also applying it to parish government. We cost allocated, okay? We cost allocated, but we were able to cost allocate differently because in the case of the 30-year business that I was in, we had one service that we provided, which was maintenance. We had a certain number of employees, managers that were involved in maintenance. We had revenue from maintenance, direct revenue from maintenance, and so the cost allocation for the people who worked in maintenance, that was directly arrived from the revenue generated by maintenance. I'll quickly go through the others. We had repairs. We had people that were dedicated to repairs. We had modernizations of existing equipment, people that were dedicated to that because that's what they did. And we had new construction. Okay. We had people that were directly involved in the workings of new construction. So all of their costs were allocated to 4 funding sources. Okay? What we had was a office staff, clerical, payroll, etc. I'm just calling it an office staff as opposed to breaking it up into individual. An office staff that supported all of these departments. We had managers like me who managed all 4 of those departments overall, so I had to be allocated out to them. But the big difference is that I see, and I'm curious with the answer that Annie just gave to Ms. Gina, I'm not doubting it, but we don't have revenue, we don't have these different revenue sources. We do have revenue sources that cover, in the case of Sales Tax District 3, I would think that they cover 100% of the Public Works Department, or very close to 100% of the Public Works Department, okay? I would also think that they cover a fair amount of engineering, because some of the engineering is involved in what Public Works mission is, okay? When we get into the other layers, like planning and development, human resources, the parish council, the parish president's office. I know we have other funding sources other than sales tax District 3. But I guess my question for Annie is, Annie, do we have so much funding from other sources that we only cost allocate, other than, when you're saying cost allocate, you're not talking about Jay Watson's people in Public Works? That's a direct, that's
Yes.
a direct cost.
A direct cost.
Okay, so it's not cost allocated.
No.
Okay, so to be clear about this, and I think the council, the administration, all of us have to understand this. While the statement of 70% from sales tax District 3 is, I don't know if it's likely true or untrue, okay? But 6%, we have to realize can be deceiving, because all of the costs that are associated directly with Public Works is not a cost allocation. So its biggest cost is a direct cost, correct, Annie? Their employees, their managers, the people that do all of their work, their equipment, all of that is a direct cost, because that's what Public Works does.
Yes.
Yes.
Okay.
Okay.
So I'm not going to go on with this, but what I would like to know is, when we take the revenue, and I think I heard earlier tonight or today, our revenue source after splitting out the cities, municipalities, is $80 million from sales tax District 3.
That's what we project for this year.
Okay. So, Annie, if you could, and I know we're at budget time, okay, and your time is limited, but sometime between now and once you finish budgeting and get it presented, what I would like to know is, of that 80 million, how much of it goes to direct cost? For example, two specific departments, Public Works, engineering, okay, and I would think to a lesser degree, possibly environmental services, to a much lesser degree. Okay.
None of it goes to environmental services.
Okay, then I was just thinking they might get a couple of percent. But those two departments have to be the lion's share of the direct cost towards sales tax District 3. Am I correct?
Yes.
Okay. So when we say 6%, we're saying 6% of every department other than Public Works and engineering is cost allocated.
I'm saying that 6% is the cost allocation from the administration, and not just administration, but council. It's the administrative cost allocation from anyone who is a service department, from the people who provide services to those departments who are funded by Public Works. We are the ones who perform services to them. That is what the definition of a cost allocation plan is from an accounting standpoint and from what we are hiring MGT to do. So the rest of those departments, and you can see them on the face of the ordinance, it shows them: Public Works, engineering, like you said, some of development. It lists them and shows, the dollar amounts. on the face of the ordinance. Those are the ones we consider, like you said, those are direct costs of the funding source.
And in the private industry, we in MGT referred to it on their thing, we would consider that a combination of direct labor, okay, and overhead would be divided up in between those departments depending upon the usage by those departments, okay? So if our warehouse was 80% construction, that's how it would be cost allocated, but it's cost allocated as overhead. I'll stop there.
Okay.
But I'm going to talk to you once we get past the budget stage.
Okay.
Thank you.
Thank you, Mr. Bender. Mr. Laughlin, you have a question? Keep it short, please, because I'm wrapping up.
Yes, ma'am. Thank you. Annie, I have a question for you, and if the consultants need to back up, they can. So prior to cost allocation, we used a different accounting method, correct?
Yes, we use multiple methods.
Right. So like one alternate could be that you just internally invoice each department,
Well,
right?
that's basically what we're doing with this
This is
method.
a more efficient way to do it, would you say?
Yes, I mean, it's
Like, I know
this is a more appropriate, precise measure that is backed up by statistics and methods, and that is supported by GFOA, and
Right.
it's appropriately used, and it's widely used by other agencies.
And then in addition to HR being like an obvious low-hanging fruit, like this is something you have to cost allocate in order not to have an HR person in every department, IT would be the same thing.
Yes.
Right? So we can consolidate and just have one HR department,
Yes.
one IT department, so that, and then whatever, we can allocate the cost almost like if we were kind of invoicing them. Like, this is
Yes.
how much HR Public Works used, for example.
Yep. Yeah, and it's kind of like the idea behind GEC, right? The Governmental Efficiency Committee, is that why would we have 15 different HRs when we can have one HR department that serves everybody, just as an example.
And then my final question, this is all in the ordinance or it's in the budget? It's all explained how this thing
We have a one-page document in the budget that shows all of the methodologies and what the resulting percentages are. In addition, we have, of course, all the plan documents. What we receive from MGT is usually 300 pages long, so that's why we make the one-page document. We provide to the council's office a couple of one-page summaries every year when we get the plan done after the actuals are wrapped up, so that you can see what the total cost is being funded by every source, by the Sales Tax District 3, by the drainage ad valorem, and how that has changed over time, so that you can see how consistent it basically is. And then we also provide a summary of all the methodologies from year to year. So there is information there, and you'll be able to see even more detailed information about it in this year's budget when we get it out next week.
And not only this year's budget, but it was in previous year's budgets too,
Yes,
correct?
yeah.
All right,
Yes.
thank you so much.
Thank you. Okay. I don't think we have any more questions. I need a motion to adjourn. Thank you. Adjourn. Who can vote on that? No, we're just going to adjourn.